All right, guys, welcome. Today we've got Mark Podalsky joining us once again. Mark, it's been way too long. We had you back on episode 25.
Oh, is that what it was?
It was. I looked
Nice.
before, and now we're approaching right around 200. So, man, great to have you back.
Wow. Wow. So you literally had 174 boring guests. And it took that many guests to get to me.
It
That's
was like
cool. That's
it was a
fine.
death march. We trudged through 174 people to finally bring you back, man. So we are excited.
I'm excited. Thanks,
I'd
guys,
say
for
we
having
had
me.
maybe 170 boring guests because we had one or two
Yeah.
that worked, and both of those were CPAs.
Yeah. Speaking
Yeah.
of boring, Anthony's our co-host today. But Mark, what we're gonna do is I was gonna start this off, man. I know how Anthony kind of got made fun of in high school and was called a geek, but how do you acquire the title of Land Geek? How did this come about? Start us there, please.
I mean, you could just look at me and be like, okay, land Adonis is not going to work. And so I remember when I was going to start teaching the model to people, and I was listening to an audiobook, and I'm taking a walk around my neighborhood. And so, my name's Mark Podolsky. No one's going to remember the name Mark Podolsky. And so I thought, oh, what would be a fun name that would be a good brand that would kind of represent me? Like, oh, I love technology. I love sci-fi. I'm kind of a geek. And so I thought, oh, well, what if I just call myself the Land Geek? That would be more memorable than my name. And so that's how I started it.
Awesome. So tell us how you even got introduced to Land. Was you watching some show late night and came across it, or tell us the origination story here?
So Anthony knows the story. I was a miserable, micromanaged 45-minute commute to work and back investment banker, specializing in mergers and acquisitions with private equity groups. And Cameron, it got so bad for me, I wouldn't get the Sunday blues anticipating Monday coming around. I'd get the
Mm.
Friday blues anticipating the weekend going by really fast and having to be back at work on Monday. So my firm hires this guy, and he's telling me that as a side hustle, he's buying up raw land, pennies on the dollar. He's flipping them online, and he's making a 300% return on his money. I'm like, this doesn't make any sense. So I don't believe him. I'm from, Missouri, the show me state. So I go to New Mexico with him. I got $3,000 saved up for car repairs. I do exactly what he tells me to do. I buy 10 half-acre parcels, an average price of $300 each. I flipped on online, and they all sell for an average price of $1,200 each. It worked. So I went to another auction, and this is in Arizona where I live, and there's no one in the room. This is 2,000, and I'm buying up lots and acres for nothing. I flip all that, and I made over $90,000 cash. So I go to my wife, and she's pregnant at the time. I said, honey, I'm going to quit my job and become a full-time land investor.
I'm a genius.
Yeah, I figured it out.
Yeah.
Yeah. So guess what she said?
You're
You're not.
You're an idiot.
Exactly. So I said, okay. So I worked the land business for about 18 months until the land income exceeded the investment banking income. And then I quit. I've been doing it full-time ever since. Done over, I think I'm approaching over 7,000 transactions now.
Wow.
And I still love it. And it's just, I do think it's the best passive income model.
Oh, well, let's expand on that. Why do you think it's the best passive income model? Or
so I think it's the second best passive income model. There's one that's better, but it's got some problems, and it's near and dear to your heart. So the second best
Paul
passive
Mitchell?
income model, it's not
Paul Mitchell franchise?
Okay, so if the Paul Mitchell franchise was a one-time sale,
Mhm.
and you get recurring income every single month without having to deal with anything physical, right? Nothing to maintain, nothing to protect, and had huge margins, and it was non-competitive, the Paul Mitchell franchise would be the best passive income model. But that's not the
Would
case.
Yeah, it's not.
So but raw land, it's a one-time sale. You get this recurring income every single month, and I kind of walk you guys through that model again. And you don't have to deal with any headaches, no renters, no rehabs, no renovations, no rodents. And there's some interesting things legally because you're not dealing with a tenant. You're exempt from Dodd-Frank, RESPA, and the SAFE Act. But what's interesting about it is that it's scalable. So you can do this from anywhere in the world. All you need is an inexpensive laptop and an internet connection. You can get yourself a virtual mailbox, give someone a limited power of attorney, and you're in business and you can travel the world. And ultimately, I think once your passive income exceeds your monthly expenses and you're totally free to work when you want, where you want, and whom you want, with whom you want, life becomes really interesting. You move up Maslow's hierarchy of needs into self-actualization. You really have time and energy to fulfill your deepest purpose in life, which I think for most people, they're just so busy working that W-2. It's not, it just seems too far out of reach.
And from what you said, is the barrier to entry is pretty low. I mean, you started with $3,000. Is that what you said?
I started with $3,000. I've had clients start with $500.
Wow.
You don't need a lot of money to get started at all.
So you alluded to it. So if you could, Mark, share us kind of an overview of this business model. What does this look like, right? Somebody comes in with $500 or 3,000 or 10,000. What does this look like?
All right. So I'm going to walk you step by step through the model, Cameron. So you live in Vegas, right?
Yeah.
Okay. So I'm going to assume that you and Anthony own a 5-acre parcel of raw land in Arizona, which is where I live.
Okay.
And you guys owe $200 in back taxes. And so you're advertising two important things to me. Number one, you have no emotional attachment to the raw land. You're in Vegas. The property is in Arizona. And number two, you're distressed financially in some weird way. It's probably because you went into debt on Paul Mitchell products, but that's a whole other side thing.
It's a whole, yeah.
So
you,
he
Mark.
did it early too.
Yeah.
That was
Thank
seamless.
So you're
Good.
distressed financially in some weird way because we don't pay for our property taxes. We don't value things in the same way. And so essentially what happens is the county treasurer keeps sending you guys notices saying, Anthony, Cameron, if you don't pay your taxes, you're going to lose this property to a tax deed or a tax lien investor. So all I'm going to do is look at the comparable sales on your 5-acre parcel for the last 12 to 18 months. I'm going to take the lowest comparable sale. Let's say it's $10,000. And then I'm going to divide by 4. That's going to get me what Warren Buffett would call a 300% margin of safety. So I'm going to send you an actual offer of $2,500 for your 5-acre parcel. Now, Cameron, you accept it because for you, $2,500 is better than nothing. And that's a lot of Paul Mitchell products. Anthony might not, right? But you definitely would.
I'd take that. That's like a month's worth of product.
Yeah. That's a month worth of the product.
Yeah.
But 3 to 5% of people are going to accept my quote unquote top dollar offer. So now that you've accepted it, I have to go through due diligence or in-depth research. I have to confirm you guys still own the property. I have to make sure there's been no breaks in the chain of title. There's no liens or encumbrances. Back taxes are only $200. I've got this checklist that I outsource to my team in Jamaica. It costs about $11 for them to do due diligence. Now, if it was over $5,000, I take no title risk. I close traditionally through a title company, but this is only $2,500. I'll trust my team. So now that I own the property, I'm going to sell this property 30 days or less, and I'm going to make it cash flow like a rental home. So Cameron, I have a built-in best buyer. Do you know who it is?
I do, but I won't.
You do know who it is.
He doesn't.
Yeah, it's the neighbor.
It's the neighbors. The neighbors.
You know. Yeah.
So I'm gonna send out neighbor letters saying, hey, here's your opportunity, protect your privacy, protect your views, know your neighbor. So oftentimes the neighbors will buy. If they pass, I'll go to my buyers list. The buyers list passes, I'll go to a website you may have heard of. It's called Craigslist, 15th most trafficked website in the United States. I'll go to one I know you guys have heard of called Meta or Facebook, buy sell groups in the marketplace. And then I'm gonna go to the lands. Landmodo.com, landfarm.com, landsofamerica.com, landflip.com, landhub.com, platforms where people buy and sell just raw land. No Paul Mitchell products are even advertised there. So now all I'm going to ask for is a $2,500 down payment. And then I'll make it a car payment, say $297 a month for the next 84 months at 9% interest. So it's a one-time sale. I get my capital out on the down payment. I could go 7 to 10 months out. And then I'm getting $297 a month for the next 84 months at 9% interest, no rehabs, no renters, no renovations, no rodents. And if I can do that again and again and again and create all these land notes to the point where my passive income exceeds my fixed expenses, then I'm totally financially free.
How long of a sales cycle typically is that, right? You acquire that property, $2,500, and then you take it to the neighbor, and then you go down the list. Do most of them, 90% of them, sell to neighbor? What does that look like?
So from a sales cycle perspective, well, let's just take the broad sales cycle, for example. So it's like when I'm sending out offers, I'm going to budget about 4 to 8 weeks to get
Okay.
accepted offers back in. Now, there's 3 ways to buy land. The first one is sending out offers. The second is to buy wholesale and then sell retail. And the third is what I call land arbitrage, which is a little bit more advanced and might be outside of the scope of the podcast. But while that's happening, I can look at the other 2 ways to buy property. So I'm not just sitting there waiting for the offers to get accepted. And then how long does it take to actually sell the property? Or is that what you're saying? After the neighbors, or the percentage of people, how many times do the neighbors buy versus my buyers list versus the other platforms?
It was kind of both. Like, how long is that sales cycle, right? So you've got a list that you can sell it to, but typically how long does it take to move one of these properties?
Yeah. So we want to sell it 30 days or less.
Okay.
Yeah. Now, if it doesn't sell in 30 days or less, something has to change. Maybe my headline needs to change. Maybe the down payment needs to be lowered. Maybe the whole price needs to go lower or higher. Maybe if it's too low, people think there's something wrong with the property. So some variable has to get isolated and changed and then tested and measured.
Now, what happens if somebody stops making their payments?
Okay, so in the case that Cameron, who sells, buys the property from me, right? So now he's making $297 a month payment to me. And one day he's like, okay, I'm out of Paul Mitchell product. And I'm just not going to pay, right? Like I have my priorities. So
yeah, exactly. He's got his priority, right? Yeah.
So then I'll send him a notice saying, okay, you are now, it's 30 days past your due date. And this is all automated with software, by the way. So he'll get a notice and then say, hey, look, if you don't make your payment in the next 30 days. So you have 30 days to cure your default. If you don't do that, you're going to just lose the property, because we use a land sale contract. So a land sale contract means that I own the property, and that until Cameron pays off his promissory note, then the property does not get deeded to him. It's different than a deed of trust like you would get with a home. And so this way, there's no cost of foreclosure. And what Cameron has done after his default is he's reduced my cost basis on that property. So now after his default, my cost basis may have gone from $2,500 to $1,000. I resell that property. I get $1,000 down. I get another $284 or $297 a month for the next 84 months, and extends out my return on investment.
You know what that reminds me of when I don't know if I've said that I'm a CPA, but
only take you 6 minutes in this interview to bring that up.
When I first started working for the firm, we audited a group of timeshares in Las Vegas. Very interesting business model. In some ways kind of similar, because what they would do is they would sell like a fraction of that room. They would finance it themselves, so they're getting that interest. And then if the person defaults, they just put it back into the machine and sell it again, which I thought was a great business model. And now I can see that is where it is for flipping land. And we've been flipping land, as I mean, obviously, as you know, Mark, and we've had a few foreclosures, and every one of them we have received in payments from the buyer more than what we paid. So like in your example, if we paid $2,500 for it, when we ended up when they defaulted, we got all of our money back. So then we just plug it back in for sale. I mean, so it's it's not like it's a product like a retail product where there's a restocking fee, or maybe it's not as good of a quality because it's an open box or it's been used. This is the exact same product with no wear and tear.
Yeah. Exactly.
But I gotta imagine, Mark, like right now, we believe we're in a recession, and you were doing this for since 2000, so you already have that experience from the Great Recession. Share with our listeners what the impact was that on your land business.
So it was really interesting because the company itself was still profitable because we're making our money on the buy and our margins are so big. But from a cash flow perspective, 50% of my notes defaulted during the Great Recession. And I really got hit. We're sort of in the long tail of real estate. While residential and commercial were getting hit hard in 2008, I personally didn't get really hit until 2010. And so really for us, unemployment was the biggest factor than any other factor. And what's also interesting is like right now with in interest rates being where they are and inflation, we're not seeing any impact in our business as of yet because we don't use debt to buy these properties. So unlike if I'm financing a commercial building, let's say I'm doing multifamily, my interest rate goes up. That just squeezed my margin if I didn't buy the rate. So it's very different in that respect economically when you're working the land business. Now, that being said, and I write about this in Dirt Rich, I had Parkinson's law of money. So the more money I made, the more money I spent. So me personally taking a 50% hit on my income was no fun.
But then how did that turn out? Because then you got that land back and resold it. So how did it end up working out a couple years later?
So every year my company has been profitable. And so what happened was we just reconfigured and rebalanced the portfolio and figured out the new pricing structure. So our cost basis went down with all those defaults. And then it took a little bit of testing the market. What in this market will move this property? And oftentimes it was just going with the same price, but just a lower down payment and a lower monthly payment. And we just extended out the months. And so it was fine. We came back pretty quickly.
The first time I heard about land flipping, I tell you, to be honest, I just paid it no mind. And in part because of what I was thinking, like I was thinking about house flipping, right? Where you got to find that deal, undervalue and maybe do improvements and then sell it. But with land, I tell you what I'm envisioning is like a corner lot, on two major streets or somewhere here in the valley, and that land is going to be hundreds of thousands of dollars. But you're mentioning land that's selling for 10 grand. So share our listeners, like, well, what sort of land are you going after?
So we're going after rural land 2 to 3 hours from the nearest big city. And if we can get it in the path of growth, great. But if not, it's fine. And so what was once an asset has now become a liability for these land sellers because they're paying the property taxes every year and they've never done anything with it. And so they get to a point where like, why do I keep paying the property taxes on this? And then they get an offer from someone like me. And it's just like, if I offered you 25 cents on the dollar for everything in your garage that you're not using, you'd be like, oh, great. Take it.
What I would also think is that with this type of asset class, it's very difficult to determine the value. It's not like, there's an MLS or, a Zillow. I mean, if I want to sell my house, somebody will tell me approximately how much it's worth, but how does that relate to when we're buying this raw land?
Yeah. So you're talking about an inefficient market. And it's really what a buyer and a seller agree to. The comparable sales are all over the place, which is why I start with the lowest comparable sale. And it's another reason where we don't look at infill lots say in like New York or San Francisco or LA, because I'm not going to get that asset 25, 30 cents on the dollar. That's going to be a speculative play unless I get lucky and I find a distressed seller. But even a distressed seller is going to go to the biggest, baddest land broker in town with a good infill lot. So when you're out in this more inefficient market, then that's where we're getting these 300 to 1,000% margins.
Mark, you and I don't have the type of experience Anthony does in accounting, because if you didn't know, he's a CPA. And part of the CPA job is just to toil away in your office for hours on end. But how much time would just us mere mortals have to spend if we were to build some sort of land business? How much time do you devote to your land business?
So I spend 30 weeks. I spend 30 minutes a week in my land business. And I just have a meeting with our acquisition manager and our team. And then I'm just looking at numbers. So really, once you build the team and you want to use 3 levers essentially to scale land business. You want to use other people's time. So we use inexpensive virtual assistants throughout the world. We want to use other people's money to grow your land business. And then we want to use software and automation. And so 90% of our business is automated with inexpensive virtual assistants and software.
So when someone starts, what's the expectation, right? Is if someone comes to you and says, hey, I want to start a land flipping business, you got to build the team. How much time does it take to build the team? What does that look like?
Yeah. So it's sort of like this ascension model where when you first start, you've got to get knowledge and you have to learn the business. And the only way to learn the business is to do the business. So you can't delegate what you don't understand. That's called abdicating. And then next thing you know, it's the blind leading the blind. Yeah. So, you first are going to start in the business as an employee, and then you work your way up to manager. And now you start managing the business, and then you work your way up into, say, the CEO role. And you're less, now you're thinking more strategically. And then ideally you become chairman of the board. So it is a model. It's not like flipping a switch where you can just, scale your land business in month 1. There is a learning curve. You need to get some pieces in place. You need to get competence and you need to get confidence as well. And then once you have those 2 pieces, then you can really take it to the next level. So I see for most of our clients, the first year is learning curve. The second year is where it really hockey sticks up. They get themselves out of the business and they've really built a passive income machine so that they can travel the world if they want. And this business is continuing pumping them passive income, mailbox money every single month.
Now, in the meantime, building up, what's an expectation of time?
I like to tell our clients 2 hours a day, 2 focused hours a day. So 10 to 14 hours a week. And that's focused. That's not, I'm going to check my email. Oh, did I get an Instagram ping? And you're really just focused on doing the Pareto principle, the 20% of the most important activities that yields you 80% of the results.
Okay. Now, just for our listeners, when we do a podcast interview like this, we are streaming it on our YouTube page and our Facebook page, which not only do you have the opportunity to listen live and kind of see Cameron before the video editor kind of makes his hair look even better, right? The best part is this can be interactive. You can submit your questions in the comments and we have the ability to ask our guest. And in order to make sure that you're aware of when these opportunities come, you should recommend that you follow our Facebook page and subscribe to our YouTube channel. That way you will be notified when we do have these interviews. So if you're here, you got a question, go ahead and put it in the chat. Now, Mark, what's like an ideal kind of skill set or trait or experience that you've seen for somebody to be successful in the land business? Like,
I mean, I had no real estate experience when I got in. I think there's one trait, just one that you have to have, and it's grit. That's it. You need to have grit. And I think you need to have that in every phase of life, because you're going to have to deal with setbacks. I love this idea of you're kind of like a hockey player. You got to love hockey enough to get your teeth knocked out and get knocked down and get back up. It's the same thing in business.
Yeah.
Right. And you're going to have challenges. You're going to have to embrace the suck, because there's two sides of this business. You got the deal flow side. Then you've got the marketing and selling side. And oftentimes it's a rare person that loves the analysis and is a deal junkie and loves buying the properties, 25, 30 cents a dollar. And then that same person loves marketing, and then they love selling. Right. So you have to play to your strengths and then be an expert at finding experts to fill in the gaps on your weaknesses, where you just have to be competent enough to be able to tell somebody, this is where I need you to help me to grow the business.
Mark, what kind of opportunities are in this space? Like how competitive is this? Is it, you started a long time ago? Is it getting more competitive? What does that look like if someone were to start today?
Yeah, it's such a great question. And Cameron, I hate to give you a compliment with that hair.
Me too. I'm going to take away a point for you.
Fair enough, Anthony.
Okay.
Yeah. Sorry.
That's fair. So there's a great quote by Warren Buffett. It's not how hard you row the boat, it's how big is the boat. And we have a massive market. So there are billions of acres of raw land for sale in just this country. And you could not think of a more boring real estate niche. So you would not go on HGTV or the DIY network and see flip this land. The before picture is raw land. The after picture is raw land. If you go to a RIA meeting, a Real Estate Investment Association meeting, 100 people in the room, 99 of them will be flippers, wholesalers, and landlords. You and I would be the only land guys there. So we have a massive market. There's literally no one doing it. And there's no big money. There's no private equity groups. There's no hedge funds. You, me, a million people could be in this niche. We're all going to run out of money before we run out of deal flow.
So tell us a little bit about your clients, right? If somebody comes to you, what kind of resources are available to them? What can they expect if they reach out to you?
So there's a few different ways that we work with clients. It depends on them. So there's a do-it-yourself model. So if you're the kind of person that has a tremendous amount of discipline, like let's say like Anthony, who can wake up at 4 a.m, get to the gym by 5, right? And can watch some YouTube videos that have perfect form on his exercises. Then we have
Mark, are you spying on me? No, I'm just. If anything, that sounds more like Cameron. But
I mean, I think Vicky said, help motivate Anthony get.
That's awesome.
So if you have that kind of discipline, do we have a do-it-yourself course? If you have a little less discipline, and you want to have it kind of done with you, right, and learn the model with you, we have something called Flight School, and that's a 16-week course, and that provides a lot more accountability. And then once you have graduated out of that, you can look into a one-on-one coaching. So all along the line, we try to help everyone along the economic spectrum, if you will.
What's you got some? I was gonna say, what's maybe a success story that you've got? Right?
Oh my gosh, I've got a lot of success stories. This is one of my favorites, just because I think some of the listeners who may have solved their money problems, but not their time problems, could relate to. So Roberto Chavez is a corporate attorney in El Paso, and he doesn't love it. And he knows that he's trading hours for dollars. And so he discovers land investing, And then his first year of learning the model, he's working part-time, remember, in his land business. He's working full-time as attorney. He builds his land business to $10,000 a month in passive income. His second year, he gets it up to $18,000 a month in passive income. Again, he's doing this part-time, and he goes down from 5 days a week to 3 days a week, working one day with his dad on his ranch, which I think was just, beautiful. And then another day doing whatever he wanted. And then his third year, he got to over $27,000 a month in passive income. And he quit his job and replaced his income as a corporate attorney. And now he's, I think in his fourth year, he's over $35,000 a month of passive income. He's married, he's traveling the world, he's solved his money problems, he's solved his time problems, and it's just an amazing thing for me to witness.
Great story, Mark. I'm sure you got one, because I know I've been to the boot camps and I've kind of talked to some people. I mean, so there you have a professional, somebody who also probably has some capital as well. How about a story? And I know there's many of a college student, or just, and I know there's a story of a high schooler, but maybe share somebody who's kind of new, doesn't have a lot of world experience or a lot of capital.
Yeah. So Michaela Sorney was in college starting her land business part-time. And Michaela didn't have a lot of capital. So what she would do is she would just wholesale property. She would just flip. She didn't even start financing until she had enough capital that she could do that and had enough runway for that. So by the time she graduated college, she had built her passive income to over $20,000 a month.
Wow. Awesome.
Yeah. And again, this is part-time. And she has a job right now, and she's still running her land business part-time, building it up.
Man, talk about freedom, right? I graduated college with a whole bunch of debt. Thanks, Mom and Dad.
Yeah. and then there's a high schooler who's 17, and she's working this business with her dad. And I don't know what she's at now with passive. I think it's over $2,000 a month, but I know it's way higher than minimum wage.
Yeah.
Working at, say a Cold Stone Creamery.
Well, I'm a big fan of Cold Stone Creamery, but imagine being in high school and having $2,000 a month in income.
Imagine being in high school and understanding business, right?
Yeah, exactly. Now, Marco, we do have a question here from Esther. It says, where do you find the land to resell?
Esther, just like Cameron, great question. I have a feeling she's a big fan of the Paul Mitchell products as well. Okay. Great mind. Think of
who isn't, Mark?
See, I think that was like negates the point, because it's a compliment.
You got another one. You're up to 6 right now.
It's backhanded. Yeah.
Yeah. So Esther, let's just be honest, right? Nobody wakes up and thinks to themselves, boy, I'd like some raw land in Iowa today, unless you live in Iowa. So we want to focus on the Sunshine States. So the Southwest, we got Arizona, Nevada, New Mexico, Colorado, California, Texas. How about a little bit the Northwest, Oregon, Washington, and then Florida. So those are going to be the states I would focus on first. It's going to have, just an abundance of inexpensive raw land and the biggest buyer pool that you would ever imagine are going to go to in those areas.
Okay, now, so let's say Esther lives in New York. How can she buy land in sunny Arizona?
So she's going to get a county list in sunny Arizona. So there's 3,007 U.S. counties, and she's going to go to, say, a site like landmodo.com, and she's going to do some county research, and she's going to see, well, where are all the land investors buying land? And then she'll see, oh, look at that. And then she'll start doing some research. And then she'll contact the county assessor, and she'll get a list of all the real property owners in that county. It's public information. Or if she really wanted to, she could go to a company like a datatree.com/land geek, get a discount, and buy a list like that as well.
Okay, but does she need to go to the Does she need to see the property or?
No, I mean, I can't tell you the last time I looked at a piece of property. So essentially, when she's doing her due diligence, she's going to delegate that piece of it. So I have a very simple business philosophy. I can always make more money. I can't get more time. And so I'm going to delegate that piece of due diligence to someone local if it's an area I've never been to. And so for $50, I'll put out a little Craigslist gig, have someone local go out to the property, fill out my property report, shoot videos, take pictures, let me know what are the neighbors doing, what are the roads like, how far from the nearest services, and then also make sure that they're close to the property because we're going to give them the GPS coordinates. We're going to have them ping back to us with their smartphone their GPS coordinates so we know they're close.
I would say with all the properties we have flipped, and most of them, one area we looked is in Arizona, which is only a few hour drive. We've still never been there. And honestly, now it's like, I don't want to go there because I want to be able to say that I've never seen the land. But this just shows, I mean, so Esther can live wherever. Like, this can be done virtually, which, like you're saying, will allow you to give you that freedom to do the traveling or follow, like Cameron's favorite band is BTS. He could follow them around, right, on their tour and still be flipping land.
Yeah.
Speaking of places that Anthony's ever been to, let's talk about libraries and books. Mark, right? You've got a book that's right there behind you. It's titled Dirt Rich. Tell our listeners what they can find in that book.
Yeah, Anthony's not in all that fancy book learning stuff. So, so Dirt Rich is my story and also lays out the model at a very high level for people so that if they want to learn more and go deeper into the model, they can. And I think it's a good, easy read. One day you can get through Dirt Rich.
2 days for Anthony.
Well, no, Anthony read it via Audible.
Yeah. So you could do Audible as well. And if you're not sick of my voice yet, you can hear me read it.
Esther just commented that she already read the book.
Okay, so was it good, Esther? Did you leave an Amazon review?
Okay. I would imagine it was good because she's attending this webinar or this stream. But now you're updating the book.
I am. So I wrote a new book called Dirt Rich 2, How to Scale Your Land Business. The sequel, How to Scale Your Land Business Without Missing a Beat. And it really goes much more into detail. So it's kind of a niche book where Dirt Rich is like, I don't know anything about raw land, and I want to know, how to do this. Once you're doing it and you're building your business, Dirt Rich 2 helps you take your business to the next level. Thank you, Esther.
So Esther did read the book and she says great information, and she read it through Kindle. So it's on Audible. You could buy the book and it's also on Kindle.
Absolutely.
Mark, you mentioned some of the steps, some of the resources you have. Vestor's Toolkit, you got boot camp, flight school, and then some one-on-one training. Where's like a practical next step, right? If somebody wants to follow up with you, where can we send them?
I mean, I think the best place to start is just get the book and then see if the business even resonates with you. And so I've got a link. Now, it's a free book, but you got to pay for the shipping. So if you can invest $9 on the information, I would say start there and get the book.
Awesome. Anthony is trying his best to pull that link in. He's struggling as usual, but he'll get there.
Yeah.
Perfect.
I mean, and think about it, like $9 is way less than a Paul Mitchell product.
Oh, yeah. Yeah, absolutely. So their 12-ounce moose is $12. It's $12.
Yeah,
So,
I think about that. I mean, this can make you literally millions of dollars.
but
And
yeah,
you know, I know.
yeah, that moose is good. It gives it a shine.
You know, Mark, one thing before you go, I'd like to get your experience, because I know you are practicing infinite banking, and I'd be curious, like at the beginning, and be honest, what were your original thoughts when you kind of first heard about this concept?
Yeah, so Cameron doesn't know me as well as you do, Anthony, but I'm
Lucky me.
I'm slower than Anthony. So it took me
Minus 1 point.
several times to hear the concept before I got it. So I was very skeptical because, you'd hear, oh, life insurance is not an investment, or, what's the cliche? Buy
Term invested difference.
buy term invested difference, and so the first time I hear it, I've got all these voices, and I'm like skeptical, and then I hear it again. And then I'm like, wait a second, maybe, and then there's other people in the room talking about their policies, and they're all excited about it and how they're using it. Then I heard a third time, and then I saw this chart of what happens when you stop compounding. That's all I saw. And I got sick when I saw, oh my gosh, this is crazy. It's just 1 year when you stop compounding the effect, and it's not insignificant. Like
It compounds.
It compounds. And so you never, once you understand the compounding aspect of it, and then you understand the ways that you can use it. I mean, we don't have to get into details of all the other benefits, like, asset protection and tax benefits, like just the fact that I can compound my money, and then I can borrow from it, and I can play interest rate arbitrage, and I can make 300% borrowing at, say, 5 or 6%. It's amazing. And the fact that I could fire my banker, I have my own bank. I mean, look, I love my kids. I've got 3 children. After that, my 2 favorite things in the world are my 2 insurance policies.
Wow. We've had fans, and then there's fans.
Yeah, because it just brings so much joy. It just brings so much joy.
Well, Mark, how are you using it in your land business?
So I have a life insurance line of credit.
Okay.
And so I will then, because speed's important in my business when I need to write a check. And so I'll write a check for the land. And then basically once we start financing that land, I'll pay myself back in the policy. So I'm playing this cash flow game, which I'm winning because of the arbitrage.
Perfect. Let's see.
And we have a lot of clients who are doing the exact same thing. It's like a peanut butter and jelly type of model. So
it's like Batman and Robin.
Yeah, it's like Batman.
Yeah,
once you understand it,
and
you understand the power of it. It's incredible.
Look at Esther is even looking into it as well. Awesome. Thanks for sharing, Esther.
Mark, I would like to say it's been great having you on, but it's just been okay, to be honest. Yeah.
I get it. And I appreciate you guys dealing with a very mediocre guest.
Well, Mark, I would say you had a total, of 7 points, and minus, 2 negatives for, dings against me, but that gives you a 5. So well done.
I think that could be the highest score we've had.
Well, I'm going to start keeping count, but I think you're right. But so right now you are the Zing winner.
You know what? I'd like to have, so you see it on the back of the wall. It says Infinite Wealth Podcast. Right below it, the Infinite Zing winner, the Land Geek, with my logo, and just so it intimidates other guests. And
yeah.
Like, oh, can I be as quick and as witty as Mark with Paul Mitchell products?
Yeah.
I don't know, man. You worked it in pretty seamlessly several times.
Yeah,
I was impressed.
Early and often.
Yeah, that was
done,
well
Mark.
done. Well done. Mark, as always, really enjoy having you back. Next time we won't wait 175 episodes. We will get you back on sooner. We have a bunch of clients that have reached out and had a lot of success with you. So we look forward to highlighting you once again. And we will make sure that we get the link to the book in the show notes, and then also link to where they can connect with you as well.
Absolutely. I appreciate you guys. And whenever you guys want to come back on the Art of Passive Income Model podcast, we can talk.
Okay. Love to do that, Mark. And if any listeners want to learn more about if infinite banking can work in your land business or whatever your business or investment of choice is, you can get on a discovery call with us, and we can help answer your questions and see if infinite banking is right for you. So we will put that in the show notes as well.
Yeah, Anthony, I was going to ask you, because I get this question a lot. Who is it not for?
I have an answer.
Go ahead.
But thanks for asking, Mark.
I'm going to give you another point for that, Mark. We're in overtime.
My answer is what I found is there's a lot of people that do not want to take control of their finances. They are more than happy to outsource that, right? So what people are traditionally taught is they outsource the money management part of their life. And so, hey, put it in a 401k IRA. Somebody else is going to manage it for you. And we've had people that have called in and said, hey, that's the model that I want to follow, right? Is I want somebody else to do it. And infinite banking is not a good fit for them. So it's more about the mental part of it, about, hey, I want control of my money because then I can go do X, right? So that's typically what I see. Outside of that, there's no money requirements, in my opinion, right? We teach the same concepts to somebody that's putting in, $1,000 a year to somebody that's putting in close to $1 million a year. So it's the same across the board.
Yeah, I mean, we could have a whole conversation about this. It's so interesting, especially as, like I'm a Bitcoin fan, but when you first start looking at a cryptocurrency like that, you think, oh, I've got to be responsible now. We're just so used to outsourcing our finances to these institutions that,
They could care less.
They could care less. There's no benefit. And it's a different mindset. But hopefully I'm raising my kids to not depend on them and do that.
Exactly.
Amen to that.
Yeah.
All right, Mark, thanks again for your time. And you ended up with 6 points. So, man, you're just getting in there. So well done. And well done, Mark.
That's right. Thanks, guys. Appreciate it.
Go make it a fantastic day.
Take care.